Day trading is a trading and investment strategy where investors buy and sell securities within the same trading day to pursue profit.
It's often glamorized as a way to make money outside of a 9-to-5, especially since the birth of crypto and also since we've seen a bunch of meme stocks in more recent years. While there might be opportunity to make a profit, day trading has inherent risks. Is day trading worth it?
Let's talk about it.
Welcome to Net with Lizzy and Lissa, where we analyze hidden costs and empower you to make your own damn decisions in life. Each episode covers a different facet of life, and at the end of each episode, we each give our takes on whether or not we think something is net positive or net negative.
I'm Lizzy, a strategist and consultant with almost 20 years of experience in finance and investing.
And I'm Lissa, a personal finance expert and certified financial planner. We're best friends who talk about money
and everything else.
In today's episode, we are discussing day trading and the financial markets. However, this episode is for informational and educational purposes only, and it should not be misconstrued as financial advice. We're going to share our experiences and our opinions to help educate, but you should always consult a professional for guidance as needed for your individual circumstances.
Yep.
Is day trading worth it?
First up, running the numbers on day trading.
According to Zippia, 90.5% of day traders are men and only 9.5% are women.
Yeah, I'm not super surprised. Interestingly, while day trading has historically been dominated by men, in 2010, there was a higher percentage of women day trading, closer to 12% of all day traders.
Yeah.
So not higher than men, but higher than current percentages.
Interesting. FinMasters reports that 66% of day traders are white and that this number used to be higher, but is actually declining.
All right. Progress, I guess.
Diversity in day trading.
Day trading. In terms of longevity, according to unbiased.com, 40% of day traders quit within the first month, and only 14% remain active after 3 year.
Yeah, we'll talk
about that.
Here's a stat that probably explains why only few people stick with it. NewTrading.io reports that only 3% of day traders make a profit, with only 1% of day traders doing it predictably.
Wow. All right.
Yeah.
And in reality, it's probably not easy to quantify success rates. A much smaller study in 2019 from Taylor and Francis Online actually reported higher numbers, with 36% of day traders making profits in the duration of the study.
Yeah, it makes sense why it's hard to track who's profitable and who's not.
Exactly. And a lot of people are doing this on a small scale, which we'll actually get into the technicality and legality around that.
Yeah.
So it's just hard to understand.
But we all know there's more to life than numbers and statistics, so let's talk about it. Is day trading worth it?
Okay, so I want to start by setting the scene a little bit for those that are unfamiliar. We kind of gave a definition in the beginning, but basically stocks, for example, or bonds or currency, different things that trade on an exchange, meaning you can buy and sell them.
Financial products, financial securities.
Yeah, you can buy and sell them very quickly. So this is not something that has a price for a whole day. They have to be priced almost instantaneously. And so you can buy them, and most people will buy them and hold it for a long time. But day trading involves taking advantage of the volatility, so the big ups and downs in the price throughout the day, and trying to make a profit, trying to buy low and sell high within a single day period to make a profit.
Mm-hmm.
And a few distinctions about day trading. So markets generally have an open and a close. And the reason you only do it for the day is after the market closes, lots of stuff can happen that influences the opening price the following day. And so day traders do this to not have to be influenced or affected by overnight risk, where you don't have any control, you don't know what's going to happen.
Yeah.
So
with the exception of certain things like crypto.
Yes.
Right?
Yes.
Which doesn't have an open and a close.
Exactly. There are some 24-hour markets, but for stocks, which is what people most commonly refer to, people do this with all kinds of other financial products.
So you're buying and selling, trying to make a profit. The other distinction, maybe you know more about, is there are retail day traders as well as institutional day traders.
Yeah. So this starts to get into like the technology and how you approach it. But let's say retail is the average person doing it for themselves. Institutional day traders are doing it on behalf of a fund or on behalf of a pension, like a big financial entity. And often they will have additional technology. They might have like AI or algorithmic.
Or teams and teams of analysts.
Teams and teams of analysts. But sometimes they have, like basically like robotic auto orders and that kind of thing. So there are some advantages there. And basically the idea is that things are supposed to be priced efficiently, but that price is influenced by supply and demand constantly throughout the day, but also and supply and demand is influenced by what is happening throughout the day. So there's, in reality, constant changes in a lot of these markets in a particular stock. So like take Apple, for example. It may open the day at $100 a share. I don't know what the current stock price is, not 100, but say $100, it may close at 90. But in that period, it's going up and down like this. And so you're trying to take advantage of the peaks and valleys. And some day traders are doing this on like a minute by minute basis. And so it gets very, very technical. And the reality from an investment standpoint, the kind of adage is that the longer your time horizon, so the longer you're staying invested in something, the lower your risk. Because over a long period, these big peaks and valleys start to smooth out. It's going to average out. You have more time to recoup a loss and vice versa. So just inherently, short-term trading is higher risk because you don't have that time horizon for things to level out.
And then so just on the very basic level, for people watching or listening to this who don't know much about the stock market, for example, you said that supply and demand impacts the price, but I think there's also something to point out when it comes to day trading, which is there are different theories as to what affects this price.
Sure.
There's not one, it's not that everyone's in agreement, right? There's fundamental analysis and there's technical analysis. So I am trying to figure out the best way to describe it, but basically technical analysis are people who kind of look at charts like this, who are trying to predict what direction a stock is or a security is going to go, like up or down, based on looking at patterns and data. Whereas fundamental analysis takes into account more of these external factors.
It takes into account more of the underlying business. Yeah. So a stock, for example, is representative of a business. Fundamental analysis is looking at the quality of the business and kind of taking a bet on whether you think over a certain time horizon the business is going to go up or down based on earnings, based on sales, their kind of financial metrics, also based on what's going on in the news, right? So if it's a well-known company, for example, take Tesla, right? Tesla is always in the news because Elon Musk is a big figure. So if he tweets something, that can affect the price of the stock.
Yeah.
Or if there's a big change in regulations around electric cars, that can affect. So it's kind of taking in the business fundamentals, the business characteristics, and the overall environment. Whereas technical analysis is basically making these calls based on the behavior of the market, not of the business. You're looking at the volume and the price and trying to find patterns in what's happening and saying, based on what I'm seeing here, this is what I think will happen.
Yeah, which is from an educational perspective, why I wanted to point that out is, so this, if you're watching the video, like there's this little chart I printed out just for a little prop for this episode. This is from a blogger, I think a blogger called, his name's Warrior Wealth or Warrior. And now I should have written this down. Anyway, he has this chart and it has these arrows that say like, oh, sell, this is when you sell, this is when you buy, etc. But anytime you're hearing someone's analysis on when to buy, when to sell, based on whatever theory they have, that is their theory and their view. There's not one way to do it. And that, right? And I think that's a big thing that I see misconstrued, especially for people who are new at investing and who want to day trade, is they're basing their moves on what someone else is telling them to do based on that person's view, basically guess. Like they're what they're guessing. Some guesses have more thinking behind them, and some are literally just someone, you know, like I see this in crypto a lot. Is like someone thinks a certain crypto is gonna go to the moon, and then like everyone they tweet this, and then everyone else follows, and it's
right. The reality is if these were predictable things, the market wouldn't exist. The opportunity to make money would not exist if we knew what was going to happen, or if these were certain patterns that always exhibited themselves a certain way. So you are taking kind of an educated guess, or developing techniques to try to anticipate what's going to happen. I actually don't know. We had a stat on profitability, but I guess that's kind of the same. But how often the bet, so to speak, and I use that loosely, but it is in some ways akin to gambling, I guess, in that it's not a sure thing. But how often that choice actually is the correct call, right? Independent of the value of it, so the profitability.
Well, there's a lot of bias baked into everything.
Yeah.
And something you see a lot with day traders or investors in general is like confirmation bias. They said something was going to go a certain direction, and it did. And they're like, see, I told you. So now
I'm good at this.
So I'm good at this. And the next thing I predict is going to be, is going to also do the same.
Which is also recency bias. So I've been recently been good at this.
Yeah.
So I'm going to continue to be good at this.
Yeah. So all this to say that there is a lot more to think about before you become a day trader, if this is something you're interested in. So let's dig into the costs.
Yeah.
What are the costs?
So I think the number one cost is the financial cost in terms of risk. So unless you're getting like really complicated with derivative products where you're kind of borrowing, let's just keep it simple. You are putting up money to make these kinds of calls. So you are risking your principal, the amount that you're investing. You invest $10, you could lose that whole $10. There are tools to mitigate these and manage your risk, but at the end of the day, you're risking money. And as we've kind of alluded to, short-term trading, day trading, is one of the riskier types of trading or investing because of that short-term nature and because of the unpredictability, the volatility of stocks in general or currency or whatever it may be.
Yeah. So I want to put, I guess, my financial expert hat on this as well. So just theoretically, I want to talk through what happens. Let's say you go into day trading and you buy a bunch of stocks today or in the morning, and then it goes up. So later in the day, you sell it all and you've made a profit. What actually happens to that profit, right? I think what a lot of people don't think about or understand before they go into this, and I'm just generalizing, maybe you do understand, but some people go into this not understanding how this works in terms of taxes and how you get taxed on it. So if you day trade, you buy securities today and then you sell them today and you make a profit, that is considered income. And not only that, it's considered short-term gains because you've held it for less than a year. And short-term gains simply get added to basically your overall income on your income taxes, in which you get taxed at whatever your marginal rate is. So the reason there are a lot of arguments for people who prefer to invest long-term and buy something and hold it for a year and a day and more is if you make a profit then, those gains are considered long-term capital gains, which you still get taxed on, but a much lower rate.
Yeah.
Compared to whatever your rate is in terms of income tax. So that's one scenario when we're talking about day trading and you make a profit. You have to consider that you are making more income. It could push you to the next tax bracket. It could and we've talked about this on the pod before. More money is good.
More money is good.
You just have to understand how it works.
Exactly. And you have to take that into account. So for example, if you're taxed at a certain rate, that rate can eat into your sometimes entire profit. You may not be profitable at all, even when you think you are. And
until you've hit a certain
threshold, right? So that can just influence your perception of your success as well if you're not taking that into account. And then certainly these aren't being withheld as you go. And so you get to the end of the year, you're gonna have to pay for that. And you may have an unaccounted for tax bill.
Yeah. The other quick thing on that is the flip side. Let's say you're trading and you are trying to take advantage of losses. So losses happen when you buy securities and then you sell them for less than you bought them for. So there's a loss. No one likes to take losses on the surface, right? Because you've lost money. But there is some advantage to taking losses as a whole when it comes to investing, because in some instances, these losses can offset gains in terms of taxes and lower your tax liability. It's very detailed and more complex than that.
Yeah.
But when you're day trading, and if you are trading the same security, like you said Apple stock as an example earlier, like that's the only thing that you like to trade. There's actually limitations as to what you can claim as losses. It's called the wash sale rule. Look it up before you start day trading, because it limits how much you can take advantage of losses when it comes to. So I just want to show that you can day trade, feel free. There are rules you should understand both when you make profit or when you lose money that are going to affect your finances.
Absolutely. Yeah. So we have financial costs. There are also, to some extent, fees and commissions. That has, over the years, kind of been mitigated, where there's like $0 commission and fee trading. That used to be more of a thing, and then there was kind of this race to the bottom in the industry. But that there is some level of friction with whatever platform you're trading on that eats into your profit, and that the more frequently you are trading, if you trade 100 times, it's going to be a higher cost.
Yeah. So, just goes to show that this is my perception. My perception is that people love the idea of making money on the side, and rather than, do something that's taxing, physically or energy-wise, like taking on a new second job, like, let me try trading because I could do this from the comfort of my own home, sitting in front of my computer. But it's not that simple. There's a lot of
I think that's a big misconception. So the reality is that day trading specifically is very time and energy intensive. You have to be, depending on how your approach, you have to be up when the market opens. You have to be diligently watching this. Like I said, some people trade by the minute, and so you are locked in on a screen. It can become obsessive.
Yeah.
So it is a big time suck that not only takes your time, it dictates your time and your schedule.
Yeah.
I have a friend who is not a morning person. He gets up every morning. We're on West Coast time, so the market opens really early for him, and makes some trades, and then he'll go back to sleep because he's not. He has a little bit of a longer time frame, but yeah, it takes a lot of time and attention to detail, and that brings me to the other cost, which is skill and kind of energy in developing your knowledge and the techniques and approach to doing this, which is not a given, right? As you mentioned, there are a lot of kind of quick fixes. There are a lot of so-called experts out there. Just go to YouTube, Google day trading. You're going to see thousands of them that have, here's my technique, here are the patterns I look for, here's my style.
And here's how I made millions
Here's
of
how
dollars.
I made this much money, right? Which may or may not be true.
Yeah, it could be
because
true.
Because there's nothing regulating what they're saying.
Exactly.
And the reality is you don't know if that's true. And in order to find out, you have to try it. So there is a lot of trial and error. And even the people, though, 1% or whether it's the 30% or whatever that are profitable, they have invested a lot of time and a lot of money in getting to that point, because no one is doing this successfully right off the bat, period. I don't care what you say. This is not a surefire thing. There is no like magic technique, magic approach. And one small caveat here, I mentioned this to the friend who is actively day trading and learning more about it. There are a lot of people who will market their techniques and often have a community or like a Discord or whatever where they tell you their trades. That is inherently risky, because if they have a big following, they may be telling you a trade knowing that 10,000 people are going to do it, and they're turning around and shorting it and doing the opposite because that's what's going to make them money.
Yeah.
So the weird thing about the market is that momentum matters. And so if you have a big influence, like we saw with some of these meme stocks and meme coins, if you have a big group of people moving in one direction, it's actually more advantageous to move in the other. And so if you have influence as a expert, you can actually kind of make your own market. And so you have to be really skeptical of who you trust.
Not only that, well, for that person who might have the influence, there's a legal risk to that, because that can be considered
financial advice.
Financial advice or market manipulation.
Market manipulation, absolutely.
Where you are moving the market, and then if you're gonna like take advantage of that because you knew what was gonna happen before it happened, because you told the people to make it happen.
That's absolutely market manipulation.
Then you can get in trouble for that.
Right. And if you're kind of dabbling in this field and you don't have the like professional expertise, you may not realize that these are highly regulated industries. So you can kind of accidentally find yourself doing something that is very much against the law, manipulating the markets, and comes with very steep fines, potentially even jail time. And you just don't necessarily have the context to know that that's not allowed.
Yeah. It's tough because I am a personal finance content creator and I want to educate people on investing. I'm very careful. I hardly, if ever, you'll see me say a ticker symbol or anything like that. If I do, I make it very, very clear it's an example.
Yeah.
Because I want to make things accessible to people so that you actually know what I'm talking about. But it never will I be like, I own a bunch of this and so you should get it too.
Right.
And I see a lot of people doing that. And, when they're talking about broad index funds, maybe it's less risky, but the more detailed people get with their financial advice online, a lot of people can get in trouble for
a lot of trouble. And it's kind of new. The regulation is only going to increase.
Yeah.
And it will be backdated.
Yeah.
So that's another challenge, is just how do you gain the expertise and knowledge? Who do you trust? And you have to understand that you're going to have to allocate a certain amount of money to lose.
Yeah.
Because you're not going to get good at this right away, if ever. There's no guarantee. And so you have to be able to expect a certain amount of financial loss as you're developing this.
And time. So one thing, if this is really something you want to get into, whether it is something you want to do full time or try to do on the side, something that you can do that they have now is a lot of different platforms offer these dashboards where you can basically pretend you're trading, like you're not using real money. And a lot of people skip it. Yeah,
I can't think of what it is.
I forget what it's called. It'll come back to me. But a lot of people skip this step because obviously you want to get to the making money. But you might as well test your own strategies and see if what you were going to do would be a win or a loss without...
Yeah, you develop your skill set and that without putting actual money at risk. I have friends who've done that and it's been really valuable.
Yeah.
You get experience. You can follow people's trades if you have someone you're trying to use as an influencer or emulate, and just see if you can trust them. Because I have friends who are trying to find like, okay, this person, I can buy what they say. But at the same time, that's a risk in and of itself, right? If you're not doing that analysis yourself, you're relying on other people. Yeah. How much do you really trust that?
So have you ever day traded?
I have not day traded. It's not my vibe. Mostly because of the energy that it requires.
Mm-hmm.
I know that it is possible, certainly, to get good at it. Good being an interesting descriptor because you are not actually changing the markets, but you are gaining knowledge of how to predict patterns, I guess. So it's kind of a funny way to describe it, because there's always an element of chance and probability in there. But yeah, I know there's a lot of people who can do it successfully. It's just a big old can of worms. I don't want to sit there and have to pay attention to it all the time. I am very much a buy and hold kind of person. So
yeah, I want to say I've not actually day traded, like bought something and sold it in the same day. But there are areas that I'm interested in, like trading options and things like that on some certain investments, besides just, buying stock and selling stock, there are other ways to be an investor and trade throughout the day that are just interesting to me, that I don't think I'll ever go full time into any of these because it does take a lot of time and energy. I think less than people realize. Like, people think you just buy and then as soon as you see it go up, you can sell it. No, it's not just that. You're watching it very closely and following, trends. And like I said earlier, like, you have to understand the taxes of it all and all that. So I've never done it, but I've been around many, many people who are so gung-ho about it, and specifically I'd say in the crypto space, because of the volatility of the crypto market and people wanting to make quick profits. And that's fine. I think I actually know a lot of people who've made tons of money from crypto, but did they understand how taxes work? Did they understand how to track it all? No. And even more, they're basing it on what we said earlier, like following some other influencer that or someone on Reddit who has a strong belief in a certain like security or something, and then following it.
Yeah, that's one of my I guess pet peeve, or maybe that's not quite the right description, but one of the challenges I have with not with day trading itself, but with the kind of like movement into it from like just the average retail person who doesn't have any other trading expertise or other financial background, is that it is very influenced by influencers who will educate you on a very specific part of this, but you don't have any of the other financial context, the economic foundation or background to fully understand what you're doing, to understand the implications and ramifications of it. And that's just risky, period. If you don't fully understand the stock market, if you don't fully understand like the history and the kind of context of these things or the regulations and all of that, you're subjecting yourself to risk without realizing it.
Yeah. Well, and that's something good to point out is you could be following information from someone who has shown a track record of doing great, but whether or not it works for your situation could be totally different because you could have a different risk tolerance. Right. That person who's doing this day trading might have a certain level of risk they can take on, both from an emotional perspective, like emotionally they can take the risk, but maybe they have like cushions of money and other things to fall back on if this doesn't pan out. Whereas a lot of people, I think, will be like, oh, they had the successful trades, I'm going to follow the same. Yeah. But should it not work for you, do you have other things you're invested in or, cushions to fall back on?
For sure. This is maybe not a great analogy, but I think of it like someone can teach you how to shoot a free throw. That doesn't mean you know how to play basketball. Right? Like this is a specific technique and skill and you can follow that. Yeah. But it doesn't mean you're good at this whole thing. Yeah. And, there's not a lot of downside in that example, but there is downside in day trading. And that does lead me to the emotional effects. There are social effects, certainly, of just the time that you have to spend. And so it can dictate your schedule and, limit you. but the emotional toll is intense, and it can be good and bad, right? Everyone thinks that they have the capacity to be objective and invest objectively. There have been countless studies on that for the most part, people do not.
Yeah.
Everyone is emotional. Investing is emotional. It takes an incredible amount of discipline that often is just literally outside of our human capacity, because that's not how our brains work, to follow kind of your rules of investing. But at the same time, it can be addicting. So I have a close friend and former colleague who day traded for several years very, very successfully, and became like obsessive to where it affected her health. It was so, the high of it was so strong, the focus of it where you are locked in, you're like not eating, you can't take your eyes away from it. She had to stop simply because it was not good for her life, and not because she wasn't profitable.
Yeah.
And so I think that's something people don't think about. And the intensive highs, intensive lows, how that influences your mood, your overall well-being. And like you said, it takes a certain amount of risk tolerance, not just in terms of your overall financial picture and your portfolio, but in terms of your personality. Not everyone can have a losing day and shake that off and start fresh again the next day without taking on more risk, or without having that influence their decision-making going forward.
Yeah.
Or just like their night.
Yeah. And I think that that's good to point out too, because, you know, we did an episode on gambling, and this is different from gambling in terms of,
not pure chance.
It's not pure chance and odds, right?
Yeah.
There's something behind it. But what it made me think of is something like, if you enjoy gambling, I'm Filipino, so I I do some gambling, okay? Not crazy. I don't remember the last time I went to Vegas. It was earlier this year, and I don't remember the last time I played blackjack with my family. But besides the point is to be a good gambler is, yes, understanding the game, understanding the odds, but that's one piece of it. It's really knowing your capacity, when to walk away, and how to manage your emotions, not just while you're gambling or playing the game, but afterwards. And I think when you day trade or do any type of investing, you can set yourself up for more success if, like, you know when to stop, when you know when to walk away, you know when to pause, you know that you have your overall financial picture taken care of, and that, you know, rather than day trading your entire net worth, you're doing it with 10% of your net worth, right? There's different ways to approach it if it's something you really want to do.
Yeah, or we've talked about this on the gambling episode, but like fun money, right? Money you can afford to lose, right? Like,
at least to begin with, if you're not an expert.
Yeah, I don't need this. This is extra. I'm doing this. Just fill it out. Again, that's one approach to it.
Yeah.
I'm not saying that's the only way. But yeah, ideally, you have to be aware that you could lose all of this. So money you can afford to lose.
Yeah.
In the worst case.
Yeah. I think I've been kind of, in this episode, like, really hating on people. But I swear, it's because I've had so many experiences of bros. I think we call them finance bros. Crypto bros. It's just a generic term for people who are so bullish on crypto or whatever it is they're doing. So much so that they come off to me as like, this is the best thing to do, and if you're not doing it, you're gonna miss out. And it's like, that's the vibe that I get from, this is just what I see on like social media.
Yeah.
I think there's a lot of day traders that exist who aren't on social media talking like that, who are actual analysts and actual experts, like maybe the guy who did this chart, that I do want to give them some credit too.
Yeah, absolutely. I think it's a range. I have a little bit of that stigma too, and some of it is for the reasons I mentioned. People who get into this and assume that it's like this free lunch without understanding that this is not the first kind of speculative thing that has been successful and taken things by storm. There are many other asset classes that have done this. There are also a lot of busts and, you know, crashes and things like that. So it doesn't always go up forever. Even if it always goes up for years and years and years, there are market cycles and things crash eventually. And over the long term, they still go up. But over the short term, they don't necessarily. So that's my stigma, having come from a finance background, being in this space so long, and that knowing that like literally you're legally required to say past performance is no guarantee of future results on everything. Like you cannot say that this is what will happen if you work in the industry. So anyone with professional finance experience knows that these things are not a guarantee. And so that's kind of what irks me, is people who are new to this assuming or getting caught up in it and thinking that they know more.
Thinking that past experience does determine future results, when it's literally told to you in your face that it doesn't.
Yeah, I think it's like the narrow-mindedness, but the arrogance of the narrow-mindedness. If you're narrow-minded, you just don't know. You just don't know. That's fine. But if you just don't know, but you're telling everyone that you know everything, that's when it bothers me. And that's a subset, right? That's certainly not everyone who day trades, but there are some of those out there for sure.
So let's say you want to get into investing and this doesn't sound like it for you. What are other alternatives for a beginner?
Oh yeah, there are plenty of options. So the most simple is buy and hold.
Yeah, so that's a strategy.
It's a strategy.
It's not like this is what everyone has to do, but it's a common strategy.
Which the premise of this is that over the long term, even with big peaks and valleys, the stock market, for example, trends upward
over time.
And so you're buying and you're saying eventually over whatever time horizon, it might be years, this is probably going to go up over time. Again, not guaranteed, but historically that has been what happened.
Yeah.
And that's not the case with every stock. So that's another thing. This is the market as a whole, which is a sum of thousands of stocks. Just because the sum of them goes up over time, you might pick one where the business goes bankrupt and the stock goes to zero.
Yeah.
Right? So you just have to have this in mind. But that's one strategy. It's one that I employ mostly just because I don't like to pay attention to it. And so it's kind of a set it and forget it.
Yeah.
For however long. And the advantages of that are that you don't have to get caught up in the ups and downs of it. The challenge of that is that a lot of people still get caught up in the ups and downs of it. Yeah. And you can easily forget, like, oh, you can hear the news. You're not in a vacuum. Oh, this is what happened. I want to buy more. I want to sell or whatever. Yeah. And you're not touching it, right? So you don't have the cash at hand. And then over the long term, it's not necessarily as profitable. It's lower risk, potentially lower reward.
Yeah. And I think there's something in the middle too. It's a spectrum where maybe you're not buying and holding till retirement, but maybe you're holding for months or years or somewhere in between.
Yeah, absolutely. So another technique that I think is maybe more accessible than actually day trading, some people consider this a type of day trading, is swing trading. And so that's a more short to midterm. So you're making a trade for maybe days, maybe months, but basically you're buying a stock and hoping that it meets a certain price and waiting for it to get to that point.
Yeah.
So let's say you think it's going to go up, $10 in a certain period. That's when you sell. And the one of the advantages of a technique like that is that they say buy low, sell high. What is high?
Yeah.
That's one of the hardest things about trying to time the stock market. You don't know what the peak is until it's already happened.
Yeah.
And so if you set a price, this is good enough, right? This amount of increase is sufficient for me, and then I'm going to sell it no matter what. That helps you manage against some of your own behavior. But you have to be comfortable with, you might miss the peak.
Yeah.
It might keep going up after.
Let me tell you about missing the peak. This is something I've had to learn over the years, because as a retail investor and, when I was like total beginner, like, I probably did more swing trading where I buy securities, hold until I see a profit, and then sell it, make the profit, and then see it go up like tenfold, and you're like, damn, I just missed that whole
FOMO,
right? Like a FOMO. But if you take those profits that you made and invest it somewhere else, then
right. And that's actually can be a very successful strategy. So maybe you're making a small profit. Now this has other tax implications and other friction, but if you're taking smaller profits but doing it frequently, that can really add up over time and potentially be lower risk. But the challenge is your own behavior, right? You're going to see that. A lot of people see that. Oh, I missed it. So then they're going to buy it again, and they're going to buy it high at the peak, which is the opposite of what you want to do.
Yeah.
So swing trading, that kind of intermediate, is a good technique, or can be a good technique. I'm not recommending it, but that's another approach that people take. And often they'll use a stop loss. So that's saying basically if it does go down by X amount, I want to sell automatically.
Eat the losses before you lose more. Yeah,
exactly. And so you're limiting your downside risk. Now, there are situations where those things, if there is like a big flood into a particular stock where sure, you have those orders and they don't get executed because there's too much demand or there's lag time. So there are other risks. It's not a certain totally sure thing, but that's another way to approach it where you're kind of in that intermediate term.
Yeah. All right. Anything else?
Anything else? Let's see.
I think that could be it.
Yeah, I think that's it. It's good.
20 cents.
20 cents.
20 cents is the segment of the show where both Lizzy and myself, Lissa, each get 60 seconds to give our 2 cents on today's topic, whether it is a net positive or net negative for day trading. Where does 20 cents come from?
You get the opinion of 2 dimes,
y'all. The opinion of 2 dimes. All right, Liz, you are up first. What do you think? Is day trading worth it?
All right. As I've mentioned, for me personally, day trading is not worth it, mostly because of the time and attention that it requires. I'm not hating on it conceptually. In spite of the fact I think a lot of people don't take like a very well-rounded approach to it. It can be successful, but it just requires a lot. And I got too much going on to dive into that. I am definitely like more of a set it and forget it kind of investor. That said, I am getting intrigued by some swing trading possibilities and some kind of other options and derivatives. And I'll probably play around with that in the future. But really a play around approach, not like I'm doing this super strategically to like really grow my wealth. It's more like, let's try this out.
Yeah.
So that's where I'm at. Net negative for me on day trading.
All right. Net negative.
Yeah.
Interesting.
What about you?
Is day trading worth it for me? My sentiment is similar to yours. I understand the time and energy it takes to do it, which I don't have right now. So I'm leaning no. Although, rather than the complete other opposite extreme of just buying and holding and diversifying in the whole market for the long term, I have more risk tolerance than the average person that I'd say. So what I do is when I learn about a new investment or a new strategy that I want to try, I do it with a small fraction of my net worth. And so I know that if that goes to shit, it goes to zero, I'm still okay. So if I were to ever try day trading, I'd do that, like small percentage of amount of money. But right now, in this moment in time, I just don't think I have the time. So net negative.
All right.
Yeah.
All right.
Yeah. But remember, this is what we think right now at this moment in time. We are both net negative for day trading. And Liz has a history of saying negative on the show and then doing the opposite later.
Right? For
so
real.
Who knows?
Tomorrow she might be Monday morning up with the market.
Who knows? But no one can make that decision but you. So what do you think? Is day trading worth it for you?
Hit us up. Let us know what you think. Argue in the comments on YouTube.
Let us know.
Call us out if you're successful. DM us on Instagram at NetNetPodcast or email us at hi@netnetpodcast.com. And if you want to follow us individually, here's where you can find us.
I'm at Wealth for Women of Color on TikTok, YouTube, and Instagram.
And I'm at live_well_Lizzy on Instagram and TikTok.
All references, statistics, and resources mentioned can be found in our show notes. This podcast is for educational, informational, and entertainment purposes only and should not be constituted as financial advice. Remember to always do your own research, consult a professional as needed, and feel empowered to make your own damn decisions.